Are these faces familiar? Well, on the top left is Jeff Bezos. The central bottom is Bill Gates. And the upper right is Mark Zuckerberg. Okay, what are they most famous for? Well, Jeff runs Amazon. Bill started Microsoft. And Mark runs Facebook. All great companies, but do you know their other most distinguishing factor? Well, the stock owned by all three people has currently made them the wealthiest people on the planet. So in this episode, we're going to follow the money. We're going to discuss the most successful Wall Street traders who have made a fortune on companies like these. You see, you don't have to run companies like these to be wealthy. You can buy a piece of the company through owning stock and make money along with them. So let's get started. So, where are we in the context of this course? To date, we've covered general stock trading terms. Then we explored ways to shop around for the best online trading solution for you. Finally, in our last episode, we learned a proven strategy to put money away to save for eventual direct trading. Now we're all anxious to start trading, but the goal is to make money, not lose it. This is why we're going to discuss some of the best trading habits from Wall Street gurus, many who have become billionaires in their lifetimes. They can help us make our trading buys successes rather than blunders. Why take a risky chance on money loss when many traders have seen this story before? Now, following this episode, we will explore the stock trading cycles and the best times to buy stocks. Coming from this episode is more great advice on how to trade for success. Then in episode 6, we're going to take all the lessons learned and start developing your trading style. This course explores the areas of the economy where you might want to invest. It also discusses your appetite for risk. Generally, we can make more money with a little calculated risk. Some of these stocks tend to go up and down vigorously, and they can be hard to watch on a daily basis. However, there are generally larger profits to be taken. Finally, given the knowledge from episode 3 and 4, we will develop a set of trading rules that work for each individual. The rules can be fine-tuned over time, but they should not be violated in any major way. Finally, in our last episode of this beginner's course, we will look at the various savings investments available to you. Here we can zero in on our investment hotspots. So, do you want a more predictable portfolio that requires little attention but grows more slowly? Or do you want to keep general tabs on the economy and strike when the iron is most hot? So let's find out who these gurus are and what they've achieved in their lifetimes. Let's learn some of their basic trading rules from the experience they've had with the stock market. Finally, we'll put this all into context and have some general lessons learned to help everyone's trading journey. So stay tuned. Hello, it's David again, and welcome to The Wealth Warrior, where we demystify investments and show everyone how to become wealthy very simply. Now, in my last episode, we talked about how even the most cash-strapped individuals can start a savings account and start moving towards becoming a successful millionaire. In this episode, we're going to flip things around a bit. We're going to start talking about some of the best traders on Wall Street. Fortunately, these Wall Street gurus have shared their wisdom through interviews, articles, and even best-selling books. Most of these gurus make good medium to long-term decisions based on successful financial results from the best companies. They don't panic, they make deliberate decisions. Well, in this episode, we're going to talk about some real interesting people. The first person is Warren Buffett, who is the Oracle of Omaha, one of the best investors of all time, and actually richest people of all time. Peter Lynch, the former manager of the Magellan Fund at Fidelity Investments, and also author of the best-selling book called One Up on Wall Street, actually one of the best trading books written. Dalio, who's a billionaire investor and philanthropist. George Soros, who's actually nicknamed the man who broke the Bank of England. That's a long story, you'll have to read up on it. David Tepper, who's just a regular middle-class guy who happens to be a billionaire. And finally, Joel Greenblatt, who teaches value investing at Columbia University. Okay, let's start talking about some of these individuals. Now, first up is Warren Buffett. He's also called the Oracle of Omaha. He's one of the biggest actual philanthropists and investors in the world and one of the richest people. But he's actually made his fortune by value investing in a number of companies. Throughout the years, he's built up a company called Berkshire Hathaway. It's actually a very famous traded stock. Berkshire Hathaway owns a number of investments like Benjamin Moore, Dairy Queen, Duracell, Geico, and Fruit of the Loom. And Berkshire Hathaway also has a big stake in Apple. Wells Fargo, Coca-Cola, Chevron, Bank of America, VeriSign, American Express, US Bank, and even Kraft Heinz. Here are some of Warren Buffett's best experiences through some of his quotes. Be aware of geeks bearing formulas. Risk comes from not knowing what you're doing. These are both testaments to keeping trading simple and being based on good knowledge of your investments. Another quote is, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. If a business does well, the stock eventually follows. If you aren't thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes. Finally, we simply attempt to be fearful when others are greedy and greedy when others are fearful. And that says a lot about investing. I'll sum that up at the end of this episode. Next up is Peter Lynch. He ran the Magellan Fund at Fidelity Investments from 1977 to 1990. In that time, the fund grew from $18 million to $14 billion. His investments earned an unprecedented 27% year over year. As we can see by his quotes, he had many interesting experiences in trading on Wall Street. He made fortunes in companies like Ford, Philip Morris, MCI, Volvo, and General Electric. A lot of these companies are now not some of the best companies to buy. He wrote a best-selling book, One Up on Wall Street, and some of his important quotes are, the trick is not to learn to trust your gut feelings, but rather to discipline yourself to ignore them. Stand by your stocks as long as the fundamental story of the company hasn't changed. Know what you own and know why you own it. Big companies make small moves. Small companies make big moves. When you sell in desperation, you always sell cheap. So there's a lot of good lessons in there, and I'm going to come back to some of these principles throughout this course. The next person I want to talk about is Ray Dalio. Ray is the founder, co-chairman, and co-chief investment officer of Bridgewater Associates. In 2012, Time magazine named Ray one of the 100 most influential people in the world. His strategy in investing is to diversify greatly to protect investments in case of actual recession. This seems to have worked for him through his quotes. Here are some of Ray's most interesting experiences. If you're not failing, you're not pushing your limits. And if you're not pushing your limits, you're not maximizing your potential. Another quote, truth, or precisely, an accurate understanding of reality is the essential foundation for producing good outcomes. Another quote, pain plus reflection equals progress. Basically, you learn as you go. And his last quote, I don't get caught up in the moment. So basically, he actually rationally makes his time in making his decisions. Next up, George Soros. George Soros manages the Double Eagle Fund, the Soros Management Fund, and the Quantum Fund. He's also known as the man who broke the Bank of England. So in 1992, when Black Wednesday hit, he made a bet against the British pound that the pound would lose value. Through this incredible stock trading event, he actually made $1 billion US. That's incredible. Now here are some of his quotes. Markets are constantly in a state of uncertainty, and money is made by discounting the obvious and betting on the unexpected. This is a good point. There's always uncertainty in the market, but when everyone is buying and driving up costs, you should be taking profits. Warren Buffett said a similar thing. He said, "Be fearful when others are greedy, and greedy when others are fearful. While others are panic selling, you should be buying high value companies and moving some of your stocks from good companies to excellent companies." At this point in time, I consider Apple, Amazon, and Microsoft to be among the most excellent companies. And more recently, Tesla. These companies grow very steadily and aggressively, and when people sell, if they sell, then we simply treat it as a buying opportunity. We just buy more of the stock. He also said, "I'm only rich because I know when I'm wrong." Also, stock market bubbles don't grow out of thin air. They have a solid basis in reality. It's not whether you're right or wrong, but how much money you make when you're right and how much you lose when you're wrong. Next up is David Tepper. Tepper worked at Goldman Sachs for a while as a broker, but soon started his own company called Appaloosa Management in 1993. He is revered in the stock trading world and was actually the highest paid broker in 2012. Here are some of his quotes. "I am a regular upper middle class guy who happens to be a billionaire. I think when it comes to decisions, I try not to be emotional. You have to drown out the noise and look at the important facts. The key is to wait. Sometimes the hardest thing to do is to do nothing." And this is very true of trading. The final person I want to talk about is Joel Greenblatt. As I mentioned, Joel teaches value investing at Columbia University. He also started Gotham Asset Management, which has made a mind-boggling 50% a year annually. That's unthinkable. Joel is also the owner of the famous Scion Fund. Scion Fund is run by Michael Burry. Michael Burry is actually the person played by Christian Bale in the movie The Big Short. Here are some of Joel's best lessons learned. Choosing individual stocks without any idea of what you're looking for is like running through a dynamite factory with a match. Another quote. "In short, companies that achieve a high return on capital are likely to have a special advantage of some kind. That average advantage keeps competitors from destroying the ability to earn above average profits." Finally, although over the short term, Mr. Market may set stock prices based on emotion, over the long term, it's the value of the company that becomes the most important thing to Mr. Market. So as you continue on this journey of trading in your career, you'll actually look back on these and they'll actually make a lot more sense. However, I think I've distilled some of these into very interesting conclusions, and it will help you make some of your trading decisions. Here are some of the conclusions that I've drawn. Number one, know what you own and believe what you own, but based on facts, not rumors or promises or tips. Research and buy good companies for the long haul. Number three, panic only results in bad decisions. Don't set yourself up in short-term risky situations where you're always worried about the prospect of stock declines. Remember, the market has always recovered, even in wars, oil shortages, and financial crises. Number four, great companies are offering something new, often exclusive. They are also trying to build a good future based on a singular vision. Amazon, Apple, and Tesla are companies that come to mind right now. FOMO, fear of missing out. Sometimes there's a big frenzy with stocks and everyone wants to jump in and buy. Never chase stocks. Prices will always pull back to a reasonable valuation. Then you can just snap it up at a discount. Number 6, if company earnings are good, the stock will eventually follow. So great companies with great earnings that have profits, and it's great for the stock, the stock price will naturally rise. Lastly, don't base decisions on emotion. Base decisions on financial research in companies. If the company has strong earnings, the price will generally rise in the medium term. Okay, before we conclude this episode, I just want to talk about emotional trades. So for instance, say if I'm in an energy source that's non-renewable and I'm really hoping that everything's going to recover, that might not be the case. So the first thing I would do is I would Google the stocks that most represent that industry. So let's start with actually a couple of the Dow stocks, Chevron, CVX, and Exxon is XOM. Let's also look at Peabody Energy. Let's see what the investors think about all of these stocks. You'll actually see that investors have actually stopped investing in oil and gas and coal, and there's not a lot of stock money to be made. So personally, you might feel very emotionally attached to this industry, but actually as an investor, you have to break away from that and you have to start thinking about, where should I put my money? Now, let's look at one of the solar powered stocks. So one of the best stocks is Solar Edge. So let's actually look at this stock and see how this is performing. Now you can see by the performance of this stock that actually Solar Edge is doing extremely well. Investors have gone overboard in investing in this stock. Although this stock is kind of high, it shows you how investors have shifted their emphasis in investing their money into companies with what they believe is a brighter future, and that future is based on data and not emotion. Okay, that's enough about that. I don't want to talk about that anymore. Anyway, finally, let's wrap up this episode. So we've learned quite a bit about some of the lessons from the various traders, and you can go back and listen to some of their wisdom. Aside from the emotional part of trades, I think you have to start thinking about the future value of companies. It's the future value that is going to drive the price of the stock. So finally, I think the way to wrap this up is to talk about my next episode, which is, okay, now we kind of know, we're thinking about the future. We know that there are some good companies out there. When do we buy? And I'll show you in my next episode that there are better times to buy stocks. So I mentioned in this episode Solar Edge. Well, Solar Edge is way too high right now. But there are times in the coming months and even years when Solar Edge will come down. And when it does come down, you have to pounce. Now I'll show you the best times to take advantage of the price when it goes lower. Okay, that's all I have for now. So I'll see you in my next episode.